Good evening, traders. I'm Nannakshi Swami, welcoming to my channel. You are reading this caption, Machine Captures Trades That Seem Impossible for Humans to Trade. Yes, you heard it right. Today, what happened in the Nifty? I'm going to show you the analysis. This was the low made and it had closed around 23,082. Market gapped up. Simultaneously, the call option, corresponding call option, that is 23,150 call option also jumped. You cannot catch the trade. Either to go long, you will have a lot of confusion, either to go long or to go short. Today, it is highly impossible for the humans to trade the initial gap ups and make solid decisions, especially in the option. So bias is when it gaps up and it was within the previous day range, when it gaps up, and this is an area gap. Area gap means within the range of the previous day high and low. So you can anticipate for a retracement in the gap. That is the trade. So you need to wait for that, but you will not have conviction what happens in the gap. And I'm going to reveal you one very secret TWAP gaps so that you can capture the trade and you will have edge in your trade. Yes, this is a revolutionary observation from my side for you people as a gift so that you can utilize and trade efficiently. So I'll go to this is the explanation of the Nifty opening bell, first 15 minutes, it gapped up. The bias is positive. When it gaps up, what you need to do is, what should be your target? I usually do measure the gap or the gap and I measure the equal. So that will be, I anticipate for this equal target, 23,000. When I clone this gap with the rectangle from this area, and if I clone it, this is my target. Yeah. So target is fixed, 23,252. So my bias is, when the bias is positive, I anticipate for the retracement and filling of the gap. Sometimes it will not fill also. Completely it has not filled. So this is my trade for initial first within the first 3 hours of the trade. Okay. I do not know whether the market will cross the boundaries, but it seemed it may not cross the boundary. Already I made out because it was a huge down move on the previous day, and I anticipated for the inside day formation in the market. But I need to trade. How can I trade? So I selected the call option, 23,150 call option. I'll go to the chart and I've enabled TWAP. I'm giving you one secret. It will fetch you edge in your trading strategy. So if you carefully observe, I'll change this candle chart into step line chart so that you can see clearly. I'm going to mark from here. You are seeing there is a gap from the average price. There is a gap in the average price. So actually this is nothing but dynamic liquidity because the data has jumped. So usually what happens in the market is when there is a dynamic liquidity, smart money people do that, they will fill the gap. They will try to fill the gap, and we are going to take the advantage of this and trade like the institutional players. So the gap, the TWAP average price, if I anchor there, I'm going to anchor the price note over here. It was, no, sorry. It is anchoring at the wrong place. Let me make it to candle chart. I'm going to anchor here price note at this level. It is giving 125.65. And the low of the previous day low was, let me anchor the price note here. It was 108.75. See, there is lot of difference between the price. Here, price has not come to the low, even to the 23,082, and it came down to 23,139, and the option premium came down. So if I'm changing to step line, you are seeing a TWAP price gap. When you notice the TWAP price gap, and at the top, if I anchor the price note, the TWAP price was 156.55. The market started coming down. Here, it stopped around. You can see it stopped around. If I anchor the price note at the TWAP level, yeah, it is giving 127.5. But in reality, if I change the time frame, chart to candlesticks, it has made a low of 111, and the low was previous day low was 108.75. So the option premium came down to this level, almost to the previous day low, whereas Nifty had not come to this level. So the premium decay was so fast. Either you could have taken, if you would have seen the gap here, you could have gone for a P put option. There also you will get a gap there, and you could have traded. Take an opportunity, because anticipating, usually the gaps will be filled in the market. So these are you are noticing the price gap. Here, when it gapped up, there is a price gap, TWAP gap, average price TWAP gap. And again, the market, there is a TWAP price gap in this area, right? So usually market tends to fill this gap, TWAP. So by seeing the TWAP gaps, average price, time-wise average, weighted average price, you can build an edge into your trade. So when it started, when I noticed these gaps, you should have waited for the price, because anticipation was the market has to come down. When it had gapped up, bias was positive in the first 15-minute candle. And when it retraces back, and if it is holding the previous day low, you can go long. Usually, previous day low will act as the support level. In case of Nifty, it did not come to the previous low, but the option premium came down to 111. So the TWAP average price is giving you 127.5 compared to this TWAP value, 125.65 in this candle. The next candle, there was a reversal. So I've made a table for that. The first 15-minute candle opened at 142 and it made a high of 173, and TWAP level was time-wise weighted average price was 156. From there, it started coming down to this low 111. And that time, TWAP value was 126. That is 127.5. And then from there, if you would have taken the position for the up move, you would have gained solidly 189 points. That is nearly 78 points. If I take the price calculator, let me take the calculator and calculate 78 points into 75 is equal to 5,850. Here you are putting in the money. Suppose if you are entered around 126 or 25, in between 125 to 111, say for example, you have entered around 126 into 75, you would have paid 9,450. For that, you have gained 5,000 rupees. So this TWAP gaps will create an edge into your option trade. What you are looking for that, you can see there was a price gap over here. It gapped, TWAP gapped, and correspondingly there was a resistance on the Nifty. Nifty, how you can determine? I have told you many ways actually how to get the resistance. If I anchor the fixed volume profile, VWAP, then you will get these are the bands, standard deviation bands. You can anticipate for a price to react from that level, and also many, you need to master the price action. In this video, I'm not going into in detail about the price action, and also here I'm going to enable the TWAP, and here the TWAP average price started coming down here. In the next candle, T average price started coming down. So you could have taken a short trade and you could have entered into put option. That is another question. Sometimes in the market, within a day, both the call option and put option opportunity will be available. See, I've made a table. You can see, you can also do like this, and you should have bias. You should have price action knowledge thoroughly. And if you would have analyzed the market for this gain, only 130 points move would have fetched you if for the proper entry by identifying the TWAP gaps. There is a gap, that is inefficiency. Identifying the inefficiency, the smart money usually tend to fill this inefficiency. They create the inefficiency and also they fill the inefficiency. If you know this concept, you can utilize in your trade with the help of TWAP, identifying the gaps within the average price, right? This is how you can bring revolution into your option trade, option entry, and you can be profitable. I hope you understood this concept very well and try to bring, from now onwards, try to observe the gaps within the TWAP. Let me go to the live market, suppose. Now, because Crude oil futures. Let me go. Crude oil is trading now. Here, I'll change the line chart to, step line chart. You can see the price, T WAP price gap. Here, when it came down to here, it consolidated. T WAP is around this area only because there was a previous support here, right? And then it gapped up. You could have captured, suppose if you would have been into this by seeing this inefficiency, it came down. While coming down, it created an inefficiency in the time-wise weighted average price. Now it has filled with the inefficiency only. You can see the gap between this average price that is around 6,780 and this average price is 6,850. And there is also one more inefficiency around this area. When it fell down, it can go and fill that liquidity area. You watch it later. After seeing my video, go to the live market. You can practice it. These are the inefficiency. You will get an opportunity if you try to notice these price gaps, T WAP gaps, and trade. Definitely, these T WAP gaps will be filled. They will try to fill the gap. There is a T WAP gap when it started. That is yesterday's gap. It has not filled. Probably later in the day, it can come down because crude oil is showing some sort of reversal pattern setup it is forming. Probably it may continue. Okay, friends, thank you very much. Nalnakshi Swami signing off.